Listen, guys, I don't think that there is another IPO coming up that I've been more excited about or that I've been more interested in. And this is the case for the past several years that I've been thinking more about than Robinhood. And you guys know Robinhood, it's the app and platform for trading stocks. It's used by so many people. It is insanely popular right now. I know so many friends and family that use it. You guys probably know a lot too. Even those that use other brokers, a lot of them still use Robinhood even on the side just for like fractional shares or cryptocurrencies or whatever other reason. I would even say that the majority of younger people, especially like in the 20s and 30s, I would say that most of them use Robinhood exclusively as their primary platform. And that's because Robinhood has done a great job of just developing this super easy to use, very beginner friendly app that has really revolutionized the entire market in a lot of ways. Started out by offering commission free trading that got people really excited, and then they've been adding additional features over time, and it's just been gaining in a lot of popularity, and it's been forcing all the other players to kind of start copying them and start offering commission free trading because Robinhood was eating away at all of their market share and stealing all of their customers. Now, personally, I am a very big fan of Robinhood. I love using it. I am not sponsored by them, so please don't accuse me of anything in the comment section. I don't even give you guys my username so that we both get a free stock. I don't even do that. So I try to not be, biased in any way, but this is a platform that I really like to use myself. Full disclosure, I should also mention that I also use M1 Finance and E-Trade. E-Trade, for example, it's a very established name. They have a lot of size, stability. I kind of trust them a little bit more with my money. So I also use E-Trade, but over time, I've been using Robinhood more and more, and it's quickly become my most preferred and used brokerage account by far. So I've been saying for years now that if Robinhood ever went public, I would be a buyer of the stock. I would like to own this one in my portfolio because I think it's worth taking a gamble on because of their potential for dominating the market. Now, there are some very real concerns here. As a company, they experience a ton of growth, which we're going to get into in just a second. But there are concerns about that growth, and there are also concerns about their profitability, as well as the stock in the IPO being super expensive, which we're going to talk about. Valuation is extremely high when we look at their financials versus the price that you're paying. And it's also likely going to be a volatile stock. So there's a couple of things to get into here. I want to talk about the company. I want to talk about their financials, their future potential. I want to talk about that valuation, and I want to talk about the IPO because Robinhood is even doing something a little unique here as well, where they're literally putting some of the stock aside exclusively for Robinhood users to be able to buy the stock at the IPO price, which is kind of crazy. So I'm even going to show you how to do that because I'll literally be using that myself. So there's a lot of fun things that I want to talk to you guys about in today's video. As always, do your own research, make your own decisions, but this is a stock that I'm very interested in, and I want to share with you guys the positives that I see with it, but also share with you all of the concerns because there are many, and why it's a little bit of a gamble, but why it might be worth it. So that's what we're going to talk about in today's video. Hope you guys enjoyed. Hit that like button if you appreciate this kind of early look at an IPOing stock. And let's just jump straight into it. Okay, now before we jump into the IPO, let's just quickly cover the company and their financials. Now, Robinhood was started by a couple of Stanford University students who moved to New York to sell their trading software to hedge funds, where they realized that brokerage firms didn't really pay much to trade stocks, yet they were still charging commission fees to individual traders. So they came up with the idea to start their own platform called Robinhood, which they launched as an app in 2015 that allows individuals like you and me to buy and sell stock without paying any additional fees. So of course the question arises, how then do they make money? Well, there's actually a few different ways. So one is kind of obvious. They earn interest on the cash balances that people hold on their platform. The other is through margin, where they basically you basically pay interest on any borrowed money that you have from them. And then another way is through their premium service called Robinhood Gold, which gives you access to margin as well as other premium features like news articles, a bigger instant deposit, and level 2 market analysis. And that's all for a fee of around $5 a month. And then finally, and this is the biggest moneymaker of all for them at around half of their total sales. It's also a bit controversial, so we're going to talk about it. But that is to basically sell your trading data to high frequency trading firms that execute the trades and are able to make a tiny profit on each one by buying those shares at just a very slightly lower price than what they sell it at, which is known as the spread between the bid and the ask price. Now, that's always a very tiny amount, but if you add it up through a ton of different trades, it's going to add up. Now, this is a controversial practice that is even banned in several other countries around the world, including the United Kingdom. And the concern for Robinhood is that one day it could potentially be banned here in the United States as well, which would mean that Robinhood would have to start charging commission fees. But at the same time, the reality is that practically everyone does this, including TD Ameritrade, Charles Schwab, and even E-Trade. So if the United States ever does decide to ban this practice, there would likely be a lot of blowback from retail investors that don't want to pay commission fees. I personally don't think it'll get banned, at least not anytime soon, but it's still a concern that you should be aware of before buying the stock because it could dramatically hurt their sales or at least kind of change their whole business model if it was to happen. Now, where it does get a little more controversial though is when these brokers start manipulating the stock price, like when Robinhood only allowed users to sell GameStop stock and did not allow any purchases of it, which basically manipulated the stock price into going down, which greatly benefited large financial institutions that were shorting the stock like Citadel, who, oh, by the way, just so happens to be one of Robinhood's biggest clients. Now, we could go on about this corruption all day, but for me personally, I'm at the point where I just think I'll find corruption literally anywhere I look these days. So rather than just boycotting everything in existence, I'd rather still try to make some money where I can, and that's why I still use Robinhood myself and will likely still invest in the company despite some of these shady practices. But that's just my own personal opinion. Of course, I support you if you choose otherwise, and I commend you for it. That said, once I look past these controversies, there's really a lot to like here about Robinhood, as their revolutionary features gain them huge popularity among retail investors and also led to explosive growth in their financials. When looking at users, they went from less than 1 million in 2016 to over 5 million in 2019 to over 12 million last year. And here in 2021, after the first quarter reported, they've already reached a whopping 18 million users, which is probably over 20 million by now. So that's huge growth for the size. The other nice thing about this though is that those users are very young, meaning that they'll be around longer and there's still more growth to be had from either converting older users, continuing to attract all the younger people that enter the market for the first time each year, or all the while already existing users growing in age and being able to deposit more money into their accounts and on the platform. Currently, the average age for a Robinhood user is just 31 years old. So contrast that with something like Charles Schwab, a competitor, who has an average age that is more than 2 decades older at 52. So that's a huge difference. We're really seeing something like Robinhood really catch on with younger users, and that's a big deal. Now, keep in mind, older investors obviously have more money, but younger ones will eventually grow into that. And on top of all of the things we mentioned, they also command a much bigger presence on social media where they can even influence others to come to the platform. In fact, a lot of the Reddit meme stocks and the cryptocurrency craziness, a lot of that's actually been going on through Robinhood. And as a result, Robinhood's financials have been exploding through the years. When looking at revenue, they did $49 million in 2017, $175 million in 2018, $278 million in 2019, and then it really skyrocketed to almost $1 billion last year. Now, these figures are from their SEC filing, but I went ahead and converted them into growth percentages for you guys so you could see the growth rates. And you can see that they did over 250% growth in 2018, just 59% growth in 2019, so kind of a down year, but then it shot up again to 245% growth in 2020. Now, obviously, these are extremely high growth rates, but there's a couple things to be concerned about or that you should at least be aware of before you just run out and buy the stock. The biggest issue here is that sales growth plummeted in 2019, so that's a bit of a concern, and a big reason for the huge surge in growth again in 2020 a lot of that was because of the recovery off of the recession that led to so many people rushing into the stock market when they saw stocks skyrocketing off of the bottom. And again, you had all the meme stocks and the cryptocurrency craze we just mentioned, just adding even more hype to it all. I mean, Dogecoin alone was probably a big boost for them, and that's a cryptocurrency that was literally created as a joke. Still, this doesn't really bother me too much because 59% growth in 2019, first of all, that's still very strong growth, even if it's considered sort of a down year in comparison to the other years. But on top of that, I think that hype jumping in at any moment can give an unexpected boost. Plus, the biggest benefit of all here for Robinhood is that they're in a great position to experience a snowball effect from their users. You see, when you look at deposits by cohort, basically separating the new users by the year that they joined Robinhood and looking at how much money they deposit over time, we can see that their deposits increase over time. So sure, over the past year and in 2020, there was this huge explosion in new users and new growth for them, right? But that's going to stay there and it's going to actually increase over time. And again, the same thing goes for revenue generated from cohorts. What's happening here is that Robinhood is actually generating more money each year from their already existing users. So unlike other companies like Netflix, for example, that is so dependent on new users because they can't really raise their prices too much. Obviously, they have a lot of competition. They can't really do that. Well, Robinhood is actually generating growth organically from both new users and old ones too. So sure, this past year you might say, well, it was kind of a one-time event because of all the craziness, but that one-time event is not going away. If anything, it's going to snowball into more growth over time for them. That is a big deal. It really helps their business out a lot. I mean, when looking at growth rates, I really think that for at least a good while, we're probably going to see triple-digit growth rates for Robinhood. I would not be surprised at all. And that's pretty crazy because it also really helps with that rich valuation that we're going to discuss in just a second. But just to kind of sum it all up here, I think it's really important to take note of the fact that, yeah, it can be a little volatile at times. And yeah, there might be these kind of crazy events where things explode for them. But all of those new additions ultimately help them and it snowballs into more growth over time. So any kind of big growth spurts for them will always benefit them over time. So my point is the volatility is not necessarily a bad thing. It actually will help them over time. But speaking of which, those huge gains in 2020, they even helped them reach profitability as they went from a net loss of over $100 million in 2019 to an actual profit of $7 million last year. Now, I believe this year will actually be a loss again because of stock compensations and various write-downs related to the IPO. But going forward, don't be surprised if Robinhood does become a solidly profitable company that even sees giant growth on the bottom line as well, again, as we continue to experience that snowball effect. And by the way, even if they have to spend a ton of money for growth that ends up hurting their profitability, I'm totally fine with that because we've already seen that Robinhood does a great job of not being complacent with what they have, but actually investing in new ways to attract even more users. This is clearly evident in how they added options trading in 2018, added cryptocurrencies in 2019, which is pretty big right now with all the fear of inflation and the devaluing of currency with all the government spending. And then, of course, there's my personal favorite new feature of all, and that's how they added fractional shares last year that gave users the opportunity to invest in stocks like Amazon that trade for thousands of dollars a share by letting them buy just a piece of it for literally just $1, as little as $1. That's been hugely beneficial, especially to beginners that want to start out slowly in the stock market. So when you add it all up, I just feel that Robinhood is very exciting with their various products and services. They continue to push the boundaries while so many legacy brokers were either too dumb or too lazy or too complacent to figure these things out themselves until a newcomer like Robinhood came along and started pushing the boundaries and basically pushing these legacy players off their butts and forcing them to kind of get their act together. But that's led to not only a ton of growth in Robinhood's financials, but it's a snowballing growth that I'm very excited about looking into the future. So I just feel that this is a stock that I really would not mind owning in my portfolio. But how do I go about doing that? How do I actually purchase a stock? What's the IPO looking like? How expensive is it? Spoiler alert, stock is super expensive. We're going to talk about it. And how do I use Robinhood itself to buy the stock early in their new IPO feature called IPO Access, where they literally put shares aside for Robinhood users to exclusively buy some of that stock at that IPO price. So it's pretty crazy stuff. I'm going to explain all of it right now. So, when looking at the IPO, according to CBS News, Robinhood will begin trading under the ticker symbol HOOD, HOOD, on July 29th, which would be this upcoming Thursday, I believe. But I would keep an eye on that just to make sure that the date doesn't change at all or anything weird happens. But anyway, that should be the date. Now, they're hoping to price the 55 million shares for around $38 to $42 a share, which would raise over $2 billion at the high end of that range. Which, by the way, Robinhood is also planning something very interesting here, where they will literally put aside around a third of their shares exclusively on their own platform to allow any Robinhood users to be able to buy the stock at the IPO price of around $40 a share, just like bigger institutional investors. And I'll show you exactly how to do that in just a second, because that's literally what I'll be doing myself. And by the way, this is yet another feature that can attract even more users and help keep them longer, since you literally have to use Robinhood in order to use that feature. And that means these users will own the stock on the platform itself. And it's not just with Robinhood stock, they're doing this with a ton of new IPOs as well. So this could actually be something big here. Anyway, the total valuation for Robinhood as a public company could be somewhere around $35 billion at the higher range, which is insanely high when you consider that they only did sales of about $1 billion last year. So even if we bring down their market cap to a more reasonable $30 billion, we'd still be talking about a price to sales ratio north of 30, which is not only gigantic, but it's also higher than most other stocks in the market. Still, if they're able to sustain their massive growth, that metric could come down very quickly over time. I mean, revenue growth of over 100% a year, that immediately cuts that price to sales ratio in half. So that's something to think about. Plus, it looks like some big investors are already jumping on board at either this valuation or even higher. For example, Salesforce has apparently indicated an interest of buying up to $150 million worth of Robinhood stock at that IPO price, while rumors are spreading of secondary market investors willing to pay $59 a share for private shares of the company, which would value Robinhood at $55 billion. In any case, the stock is going to be very pricey at the IPO, but if you're willing to gamble on it, one of the ways that you can try to get it at that IPO price is by using Robinhood's new service called IPO Access, where regardless of your order size or account value, you get to request shares of a new company before the stock starts trading publicly. Now, what you have to do here is first get access to the new feature, so make sure your app is up to date. Then you go to Messages and click on Announcements, and then you click on Get Started on the IPO Access message. From there, you'll be able to go to the page for Robinhood stock, ticker symbol HOOD in this case, and click I'm interested. Then you agree to a few things, click on Start Request, put in a maximum share price that you're willing to pay for the stock. In this case, I put my maximum limit at $45 per share, but you can put whatever you want, and then you just click Submit. Now, I believe the allotment will be random for the shares that they put aside, so there is still a chance that your order doesn't get fulfilled. So I would recommend keeping a close eye on the stock all throughout the trading day when they IPO, just in case your order doesn't get fulfilled. I know I'm definitely going to be doing that, and then I'll adjust wherever I have to. But that's pretty much it, guys. We've got a high growth, very exciting company, but not one without their issues and concerns. And I do expect it to be very volatile, so I'm not going to go in very heavy at this time. I do want to be a little cautious with it. I'm only going to try to purchase around 20% of the overall position that I want in it, so that if it was to crash to the ground, I can literally buy that same amount like 4 more times, right? Because I'm only going to buy 20% of the position that I want. Now, in terms of it being in my overall portfolio, I'm looking to make it around 5% of my overall portfolio once that whole position is filled. So that way, I'm not overly exposed to it if things go bad. And at the same time, if the stock skyrockets, well, I've got 20% of that overall position that I want in it. And if I do eventually get up to 100%, it should be around 5% of my portfolio. That is decent exposure to it. So that's what I'm looking to do with it. I may adjust either up or down over time, depending on if anything changes with the company or the stock. But let me know if you guys have any questions down below. I'll try to answer as many as I can. Let me know if this is a stock that you're willing to gamble on. Again, it's a bit speculative, a little risky, but I don't know. I'm going to take a chance on it. All of my other stocks are up by so much. I'm kind of looking for a stock to be down on anyway, so I'm going to take a chance. I'm kind of taking more chances with stocks lately just because I'm sick of being up on every position. I want a stock to go down, so I'm going to take a chance on it. If it goes down, I can buy a lot more. And I'm not saying that to be cocky. I'm just saying that it's literally the truth. I like to buy stocks when they're going down, and so many of my stocks are up by such huge amounts. I actually wouldn't mind having something go down for once. But anyway, those are my thoughts. Let me know if you guys are messing around with this stock at all down below. And I think that's it. I will catch you guys in the next one. Best of luck with whatever decisions you guys make. I'll see you guys later. Take care. Bye-bye.